Hi students, today we're going to talk about portfolio analysis and how to analyze your portfolio. And you will have a handout like this. So let's work on it. So I'm going to go through the themes that you need to work on those. Investment project and how to do portfolio analysis, how to analyze the portfolio. First of all, in any portfolio, we look to the risk. There are different quantity to quantify the risk, different measures to quantify the risk. The number one is the allocation in your portfolio between cash, ETF, and equity. How much you have cash, and we give zero risk, 0%. I didn't have cash in my portfolio, but if you have cash, you put that. ETF, I have 35% ETF, and equity 65. That's my portfolio, Yusuf Bonaparte portfolio. And then you have to report 0 to 100, where 0 no risk, 100 is high risk. So how much you're willing to take risk, in your opinion. So these are two quantities: the allocation between cash, ETFs like a QQQ for the NASDAQ, DIA for the Dow, SPY, SPY for the S&P. I buy TQQ, 3 times the NASDAQ. So here, just to report the weight of everyone, you go to your Investorpedia and see how much. And then this is subjective, self-reported, between 0 and 100. I would say my portfolio is 90. My portfolio risk is 90. I like risk. I love risk. And the reason I love risk, just to quickly to make sure that you understand here, the reason I like risk is my portfolio time horizon is 20 years. Now my daughter is 5-ish, till she becomes 25 and she needs some money to do her business or do her projects. So she has another 20 years. I didn't need the money for myself. So 20 years, the market can go up and down. To me, I didn't care. When it's more down, when the market in the bear market, I put more cash in the market. Investment philosophy. What type of stocks you buy? Large cap, I have large cap, a lot of large cap. Small cap, I have. But my small cap become to be a large cap. Mega cap, a lot of mega cap. Mega cap like Apple, Microsoft, I think Tesla, Amazon. These are mega cap above 150 billion. Small cap below 5, medium cap 5 to 15, large cap above 15. What type of stock? Value, growth, social responsibility. I buy a lot of growth. My personal. Buy a lot of growth. Some value also. Momentum stocks. Stocks that are growing fast. Yes, I have that. I think Nvidia is one of those momentum stock. I double my money in Nvidia. And we are in a bear market now. Then you report the analyst recommendation for the portfolio. So far, 1 and 2, A and B is nothing here. You just have to go to your portfolio and see what you're doing. C, you have to start doing some calculation. Portfolio analyst recommendation. You will have an Excel file with, say, portfolio A and R. Suppose you have a company, Netflix. You have cash, Amazon, Apple. We have Netflix here. Call it Google. Cash, Amazon, Apple. Suppose you have these companies. So I have X amount of money here. I have like 100 cash. This is a hypothetical example. So these are the money I have. So total my portfolio is suppose $1,120. The weight in my portfolio, I calculate that for you. F7, which is this, divided by the overall. The weight for the cash is F8 divided by the overall. And so on, and so on. So you put, all what you have to put the numbers here. These numbers you have to input. So let me make them in a gray. That makes cells. These are you have to import. Also, you have to import the ANR for each one. So this is hypothetical. I don't remember. But for the cash, the ANR, the cash is 0 because the cash doesn't grow. 0. Or you can put, let's leave it 0. Yeah, you can put 2. I was thinking if you want to put 2, like below 3. 3 is 1 to 5, by the way. It's here. 1 to 5. It's between 1 and 5. And all right, so I have it here. There we go. So when it's sitting said I'm gonna put 2, that's fine. I think 0 is better. It's out of the game. And then you have the overall portfolio ANR now 2.797. So that's what you have basically. But if this company Roku, for example, is 4, then your is 3.69. If this one is 2.9, then your weighted is 3.63. So what you have to report these numbers and report these numbers. Now, if you have more stocks, all what you have to do is simple. Insert, put this company. What I should have. All right, Golden Sack. Suppose you have a $50 here, and then the weight for Golden Sack will be like this. Good. And then suppose the NR for Golden Sack is 3.2. Then you do this also, and that's the updated one. So if I show you how to add another company, so you have to do this one and then report that here, report the number here for how much your analyst recommendation average, and suppose 3.67. Our portfolio ANR is 3.3, means above the S&P average of 3. Then you expect higher, then I expect higher return in my portfolio. And obviously, if it's below 3, then you do the opposite. Trading strategy, when would you trade, how you trade, in the news, in the earnings, you have to report that. Portfolio properties, and here is important, the number of stocks in your portfolio. I have 8 stocks, I have 20 stocks, I have 5 stocks to report that. Home run stocks, stocks with the highest weight in the portfolio. You look to the stock that has a higher weight in your portfolio, and that will be your home run stock. In my portfolio is NVIDIA. NVIDIA is about 6-7% of my portfolio. It wasn't 6-7. It started to become. It was a momentum stock. It grew fast, and now become to be my home run. Portfolio beta. How to do portfolio beta? The same story how I did portfolio ANR, and I'm gonna explain it. Here is portfolio beta. You put the companies that you work on. You put the number, how much money you have here, how much here, how much here, how much in each company, and then that's a sum. And then you didn't need to do that, so you need to do that. You have to report this information, and then you have to report the information for every beta. And for the cash beta is 0. And then this will come. This is the number for your portfolio beta. So calculate your portfolio beta. So we did that. In my case, in this case, how much was it? 1.38. All right. And then do the CAPM model, required model, return. How much your portfolio is supposed to do? It's ER, expected return, RF, risk-free, plus beta for the portfolio, which is in this case it's 1.38 multiplied by risk RM minus RF. RM is a market expected return, and we expect it to have 10%. RF is 5%. That's by the Federal Reserve, and that will give you the average return for the portfolio, 13.38. Now, you need to calculate this number to get this number, but I already did that for you. Here, you see portfolio cap M. This is how much portfolio value. This is the RF. This is come from portfolio beta, G11. So this G11, it's already here. And this here, and this here. All what you have to do, when you get the portfolio beta, when you do this number automatically come in to here, and then you're gonna get the portfolio required return and portfolio future value. All what you have to do is just do the portfolio beta, and this number is your portfolio beta. It automatically go into your CAPM model. Now that's a return that you expect in your CAPM model, 11.9. That means this number should be 11.9. And now the action actually, then you have to report about number of trades. Remember here, trading strategy and number of trade. Trading strategy, here we talked about investment philosophy, and then we talked about trading strategy. So here, your investment philosophy, what is it? What's the A&R of your investment philosophy? And what's your trading strategy? So we finished here, I would say chapter A is risk, and then chapter B will be investment philosophy, the A&R for philosophy, and the trading strategy. And chapter C will be the portfolio properties. And we start with the CAPM. Now, number of trades you did. I did trade in this month because it was the bank's collapse, or because the Federal Reserve lowered the rate, or because the Federal increase, or because the company has a good earning, or because the company has a bad earning. You have to report some details. And here I ask you to do at least 2 trades to report. Now, performance, portfolio performance. Remember, you start with the $1 million. Here is a portfolio performance. Everybody start at the $1 million. And now you can see what's your value of your portfolio. You just go to Investorpedia and see what is the value of your portfolio. All what you have to report is this number. You put this number, then you get the S&P. Sorry, your portfolio return, in this case, would be 1.5. But we need to compare that with the S&P return. So you need to know, when did you enter the market? If you enter the market, for example, in May and June, whatever, in September, and you are analyzing the portfolio in November, well, then you have to go and see what the S&P did in September. So you go and see what the S&P, this is future. Let's take the spider, that's fine. And go historical data. And you have to go daily and see when you start your portfolio, how much was the S&P. Suppose you start your portfolio in February 7, the S&P was, spider was 415. Suppose you take this and you go to the Excel and you put that here. And then you can say, well, I finished my portfolio later. Suppose in September 23rd, that's a March 16. Now let's take the March 16. That's fine with me. Suppose you finish in March 16, then you put this number. Then automatically, so these 2 numbers, you have to add them. I mark them in this. So the S&P did negative 4.6 when your portfolio did 1.5. That means your difference in return, excess return, is 6.1. So yes, your portfolio did 1.5, but wait, you beat the S&P because the S&P did negative 4.6. So the difference, excess return, the difference is the excess return, 6.10. Now, what's a Sharpe ratio? You get 1.5%, but your portfolio has a higher beta than the S&P. So you divide this number by this, but you didn't need to do it. It's done by itself. I already done it for you. G11, G11, G11. So this, you didn't need to calculate that. It will be automatically. What's the Sharpe ratio for the S&P? Is the S&P divided by 1. Why? Because the S&P beta is 1 by construction. When we did the CAPM model in class, we talked about that. Okay, but after that, then you have the access return based risk-adjusted access return. Risk-adjusted access return. So your access return is 6 points, and this is risk-adjusted access return. All right. Now, your portfolio value 115. Suppose your portfolio was at 25 here. Boom. Just put the number. Everything is updated by itself. You didn't need to work hard. Suppose it's this is the portfolio that you have. So as of now, it's a $1 million, 15,000. So this go automatically here. It's already copied. Go take the performance as you finish the class. And this is your projected value of your portfolio. So you go there and report the portfolio return. In this case was 1.5. The benchmark return in this case was negative 4.6. Portfolio access return minus the benchmark minus 4.6. So it will be the minus because that's S&P return. And that will be negative how much? 6.1. That will be 6.1. That you mean you beat the S&P by 6.1. And the Sharpe ratio is this divided by this. That will be this. Is it 1.9? It is 1.9. Good. Whereas the S&P access return risk adjusted will be 4.6. So the risk adjusted is 5.68. Okay, so all of these numbers are actually here. As I calculate that. So this basically equal this minus this. This equal this risk adjusted return minus this. The risk adjusted the return is whatever your portfolio divided minus the 1.5. It's whatever your portfolio minus when you started divided when you started, which is 1.015 divided minus 1 million divided by 1 million. And that's a return. And that's S&P return the same. What's S&P now? What's S&P was before? The difference divided by what it was before. This is Sharpe risk adjusted return. S&P risk adjusted the same. Notice the same number because S&P has beta as 1. And this will be the risk adjusted access return. The last thing you have to do is mistakes and lesson. How would you do differently? Should you have a chance to redo all over and this? So here's I did the table, but you didn't need, you have the Excel, you will have Excel. Now, how to present your portfolio? You start with your name, and then you put some of the portfolio characteristic, portfolio return, market access return, and risk-adjusted access return. That's the first thing you report in your portfolio. The first slide is this information. You start, my name is Yusuf Bonaparte, and then you report that. I will give you a sample. And then the second slides will be your risk-adjusted return. The third slides will be this. The fourth slide will be one slide for ANR, and that will be slide 4. And then slide 5 about trading strategy. And one slide about portfolio property. And one slide about trading. That's 7. I suggest to do this. Now this, you didn't need it. It should be in the beginning, which is the first slide. First slide. And mistakes will be slide number 8. Mistakes and lessons. So I would suggest 8 slides. So you start with the information. My portfolio did that much retain, access retain. In finance, it's different than Hollywood. Hollywood, you have to watch all the movie to see the end and understand what's going on, because they want you to spend time with them. Finance is the opposite. You put your bottom line in the beginning, and then you explain why your bottom line looks like this. So this, the action, you put in the first slide. My name is Joseph Bonaparte. My portfolio access return is 5%. My portfolio risk-adjusted asset return, risk-adjusted return is 5.68. Boom. Next, I took that much risk. Next, I took that. My philosophy is this: investment philosophy. Growth stock. I buy growth. I put a lot of momentum stocks. Large cap, medium cap. And based on my philosophy, my A&R is that number. The trading strategy is this. My portfolio properties are that. And I did 2 trades, and here are the trades, and then mistakes and lesson, and you're done. So I will have a sample for you in separate video. Thank you so much. By one of the students, actually, one of my students. I think we did everything we need. So you have this handout, you have this Excel, you have this video. I think you can do it. Thank you so much, and have a great day.